Okay, now we are going to start with the concept of international transfer pricing. What are we now going to start with? Correct. Again, a very important concept. Again, can be asked in the examinations. So we have to do it very systematically. Okay. Now, where did this all concept of international transfer pricing originate? Clear? Okay, so where it all starts? See, pay attention, I'll just give you a small example. Suppose I am a company called as PepsiCo. Everybody knows the company PepsiCo, yes or no? Yes. Okay, so now I am selling Pepsi bottles. So selling price of Pepsi, let's say, is rupees 100. Variable cost is, say, rupees 60, and then assume that no fixed cost, so net profit is rupees 40. Now suppose if this PepsiCo is selling say 1 crore bottles, then in that case what is the total net profit it will have? 40 crores, correct? On this it will have to pay a tax of how much? 30%. So can I say 12 crores is the tax that it is paying? Yes or no? Okay, so now this is how PepsiCo started its business in India, and they are continuously doing this business with this whole scenario. Now this PepsiCo has got a call from Australia. Have you heard of this Australia? Yeah, you heard Australia? Okay, so Australia is a continent and a country down south. So they have received an order from Australia of 10 crore bottles. How many? 10 crore Pepsi bottles. Per bottle, how much is Pepsi earning? 40 rupees. So can I say, in short, with this project they will be earning 400 crore rupees. Multiply by what is the tax rate? Say 30%. So can I say 120 crore tax they will have to pay? Yes or no? So obviously, who will want to pay 120 crores of tax? Nobody will want to pay, correct? This is where people started creating sham companies outside India. So now Australia, the PepsiCo company realized that if they directly transfer 10 crore bottles to Australia, then in that case what will happen? They will have to pay 120 crore in tax itself, correct or wrong? Correct. So what did they do? They set up a sham company in Dubai called as PepsiCo Dubai. Sham company means just for the purpose of evading taxes. They set up a company in Dubai. Now what did they do is this. See, in Dubai, can I know that is corporate tax there or it is exempt? Exempt. There is no concept of corporate tax. Zero corporate tax is there in Dubai. So what did they do is PepsiCo sold the goods to Dubai PepsiCo at a selling price of 60. At a selling price of 60. Variable cost is how much of making this? 60. So how much is the profit that they made? 0. Now PepsiCo India makes how much profit? 0. Why? Because they keep a selling price of 60. Variable cost is 60 only, net profit is 0. And then they ask the Dubai PepsiCo to sell it to Australia. They ask Dubai PepsiCo to sell it to Australia. So what will happen? Now they will sell it to Australia at 100 rupees. Variable cost for them is 60 rupees. So can I say it is 40 into 10 crore bottles. So now they will earn 400 crore rupees. Who will earn 400 crore rupees? Dubai PepsiCo will earn 400 crore rupees. How much tax it has to give? Nil, because there is no concept of corporate tax in Dubai. Are we understanding? So by utilizing this, by creating sham companies, a lot of companies, Indian companies, started saving huge amount of taxes. Now if suppose you are the government of India, you are the tax department of India, and if you come to know of this transaction, will you stay quiet, or you will get very angry, agitated on yourself? Are we understanding what is happening? This PepsiCo is making a fool of Indian income tax department, right or wrong? Yes. And that is where, because such transactions started happening, Indian income tax government started, boss, this is not acceptable. This is not acceptable. These people are making us khufia. They are trying to evade so much amount of taxes. So what should be done? They created the concept of transfer pricing in direct tax. wherein they told that if there is any transfer of goods or services to a sister concern. How do you define sister concern? Any person having more than 26% stake in other company, associated enterprise, what you call, yes or no? If such case happens, then by default that transaction will be considered to be at arm's length price. So even if PepsiCo India proves that, even if PepsiCo India says that no sir, we have transferred to them at 60 only, what is the transfer price that Indian Income Tax Department will take? 100, because that is the arm's length price or the market price. You understand what is arm's length price? Can I say this arm's length price is basically your market price, yaar, yes or no? So even if PepsiCo India transfers to PepsiCo Dubai at 60, will the Indian Income Tax Department accept the 60 rupees selling price? Can I say they will compute it on by themselves at 100 rupees? Are we understanding? And then tax will be calculated based on this 100 rupees. Are we clear, everybody? This is called as arm's length price. And if there are any sister concern transactions which happen on international level, then in that case arm's length price will be applicable, and irrespective whatever transfer price you are selling it at, Indian Income Tax Department will by default take what? 100 rupees, called as the arm's length price. Are we clear with the concept of arm's length price? Are yes or no? Because the next question that I want to solve is based on that arm's length price. We'll have arm's length price as a structure. That is the reason I'm asking you. So are we clear with arm's length price? Bolo bolo, tell. Yes. So now we are going to solve a question on international transfer pricing. Are we ready? Chalo. So let's start. We'll first start with a simple question and then we'll solve a difficult question. Please open this question, everyone. ICAI module question, Standard Corporation of India. It's a ICAI module question. What I have done is I have put, see, I'll show you. See this, what I have done is for this question, I have put it like this in the form of a summary. So this one question is there, production capacity 25,000 units, 20,000 units, 18,000 units. This question is there. Then this question you just solved, no? ICI module question 800, 96, 33. This question is there. So in that way I have put it. Through theory only, in the form of that I have put. Then there is method of transfer pricing. So this kind of practical question I have put it here. Then there is this international transfer pricing. This question I have put. Then again this concept, this question I have put. So I put it that way. So it's there. Don't worry. This evaluation. So I have taken a concept and then I put it in the form of an example, which is question only. That way. So here it is there. This again example I put it that way. Chalo guys, let us start. I am reading the question and as we are reading the question, we will make the summary and we will try to solve this kind of question. Can be asked in the examination. So let us start. So here we are, international transfer pricing question, and this question is in your module as well. SCI is a US based multinational company engaged in manufacturing, marketing of printers and scanners. It has subsidiaries spreading across the world which either manufacture or sell printers and scanners using the brand name of SCI. The Indian subsidiary of SCI buys an important component for the printers and scanners from the Chinese subsidiary of the same MNC group. What is happening, do you know? What? Are we understanding who is the parent company here? Can I say SCI US is the parent company? Everyone? Yes. So can I write here SCI United States of America is the parent company, but is the transaction happening between USA, India or China? Which? China and India. Can I say both are sister concerns only? Why? Because they both are subsidiary of SCI USA. Can I say this is India SCI? Can I say this is China SCI? Arey, yes or no, guys? Yes. So this is India SCI, this is China SCI, both are subsidiaries and both are internally connected. Is India SCI and China SCI associated enterprises? Yes. Are we understanding this? These are both associated enterprises, no? Because their parent company is USA SCI, and the SCI USA has a stake in India, SCI USA has a stake in China. Both of them become sister concerns. Are we associated enterprises? Clear? Chalo. Now what is happening is this. The Indian subsidiary buys 1,50,000 units of components per annum from the Chinese subsidiary at CNY, Chinese yen, 30 per unit, and pays a total customs duty of 29.5% of the value of the components purchased. Will you please help me in making the summary? What are they saying? Who is buying from whom? Indian subsidiary is buying from China. How much? 1,50,000 components, correct? At what price? 30 yen. So selling price of 30 yen is from China's point of view, correct? So 30 yen, and India, for India that 30 yen is what? Can I say it is the purchase price? Arey bolo? Yes. Okay. Then what else information is given? Custom duty. Who is paying custom duty? Can I say India is paying custom duty? How much? Custom duty is being paid at the rate 29.5%. So can I say what is our landed cost? You understand what is landed cost? Yes. Landed cost means in India how much total we are paying. So 30 plus 29.5% of 30, how much? Total is how much? 38.85 yen per unit. Till here everybody is with me? Yes, alright. A Japanese MNC which manufactures the same component which is used in printer and scanner of SCI has a manufacturing unit in India and is ready to supply the same component to the Indian subsidiary of SCI at 320 per unit. What they are trying to say? Can I say substitute value is available? The person is a Japanese MNC, but he is ready to sell it to India at Indian rupee. See, rupees 320. So Indian rupee, correct? So can I say if this India goes to Japanese MNC, what will be its purchase cost? It will be 320 per unit. Okay, yes or no? And this is rupees, no? Yes. Multiply by how many units? 1,30,000. So total cost if we purchase from Japanese counterpart will be how much? 4.8 crores. So 4 crore 80 lakhs. Are we clear? Chalo. So where should you purchase from Japanese MNC or from China? Can I say we'll have to calculate and see, no? Yes. Wherever we are getting cost benefit, we'll use that, right? Yes. Okay, continuing. The corporation tax rates and currency exchange rates are, the SCI is examining the proposal of Japanese manufacturer and asked its Chinese subsidiary to present its views on this issue. Chinese subsidiary of SCI is informed that it will be able to sell 1,20,000 units of the components to the local Chinese manufacturers at the same price of yen 30 per unit, but it will incur inland taxes at the rate 10% on sales value. Variable cost per unit of manufacturing the component is yen 20 per unit. So see, now what is happening is this. USA SCI, which is the parent company, is asking Chinese SCI that, boss, if Indian SCI stops purchasing from you and they purchase from Japan, then are you okay with that? So in response, Chinese subsidiary has said that it's okay, but instead of selling 1,50,000 that we are selling to India, we will be able to sell only 1,20,000 units. So China is saying that, sir, if India discontinues, what will happen? Instead of 1,50,000, how many units? 1,20,000 units will be sold, correct? So can I say there is a loss of, correct, 30,000 units to Chinese division, correct? Okay. Plus they have said that they will have to pay some inland taxes. How much at the rate? 10% on sales. So what happened is this. See, at times when you sell it within your own country, you have to pay an inland tax. But if you export, then you don't have to pay any tax. You have heard something called as export incentives and benefits. So probably when China was selling something to India, it was exporting. So Chinese government gave them the benefit. Chalo, you are exporting, we will give you export benefits. So no inland taxes, no custom duty, nothing. You don't have to pay anything. But now because China is selling in inland local currency, local place, they have to pay an inland tax at the rate 10% on sales. Are we clear? See, again I am telling you, I am just drawing the summary. I have not started solving anything. I am just drawing the summary. Then what they have said, corporation tax and some more details are given. What is the selling price? 30 yen. They have also given the variable cost. How much? 20 yen. So how much is the profit or contribution that this Chinese subsidiary is earning? 10 yen. Okay. Now what they have said, the fixed cost will remain unchanged. The corporation tax rates and currency exchange rates are as follows. If corporation tax rate is specifically given in the question, don't act over smart and say that here they have given corporate tax rate as 34%, but as per Finance Act 2023, sir, it has changed, so I will take that. We don't want your tax knowledge here, this is costing, okay? So keep your tax knowledge in your pocket, please. So whatever given is here, you have to follow that. Okay, use your extra tax knowledge in your tax paper. For now, we will take this only. And dollar what they have given, we will take that only. Don't use your SFM. Sir, in SFM, we have studied that US dollar exchange rate is XYZ. No, we don't want that. We want whatever is given in the question. Alright. Okay. Prepare a financial appraisal for the impact of the proposal by the Japanese manufacturer to supply. In short, now we have to take a decision as a chartered accountant whether suppose you are the chartered accountant of US SCI, which is the parent company. You have to see that if India shifts its purchase from China to Japan, whether it is making any benefit. If it is making benefit, at the same time we will also have to see what is the loss that Chinese subsidiary is making, and then we will see on consolidated basis whether it is beneficial to us or not. Just pay attention. Suppose you are the chartered accountant of USASCI. Currently, if China sells to India, then in that case India is making a net profit of 100 and China is making a net profit of say 50. Okay. Now if India purchases from Japan, net profit of India will increase to 130, but China will get into a loss of 20. So before this transaction happened, can I say USA SCI in consolidation was making a profit of 150? Now after this US is making a profit of Bolo 110. As a chartered accountant, tell me, will you continue with the erstwhile policy or you will start with the new policy? You will go ahead with the old one, no? Because at the end of the day, you want a consolidated profit. You are not concerned with India, China or anything, you are concerned with the consolidated profit. At consolidated level, who is making more profit, old or new regime? Old. Are we understanding? And suppose if after changing the net profit of India rises to say 125 and China's profit is now 40. Now which one will you choose? Old or new? Are we understanding? So now we will calculate what was our scenario, and if we are changing, what is going to be the scenario. If the change is resulting into a profit, overall profit for USSCI, we will say go ahead, otherwise we will say no need. Are we clear? Are we clear with what I have done here? Now just we have to apply it in the question. Will we do that? Chalo, we'll start and then you can on a stretch you can write. Now you are in the flow with this question, no? Everybody is in the flow of the question. So can you please start on telling me the numbers? I will keep on writing. I will not solve, you only tell me the numbers. Okay. Now first let's analyze India. Can we analyze India? What was India doing previously? It was purchasing from China. How much was it paying when it was purchasing from China? 38.85 what? Yen. Can you tell me what is the yen into rupees ratio? Sir, I am not done with SFM. I cannot tell. Come on, this is simple, no? How much? Into 9.8. So how much? 380.75 rupees we are paying. Multiply by how many units are there? 1,50,000. So total how much we are paying to these Chinese people? 5 crore 71 lakh 09 500 क्या 73 है? Okay, 73. But my final answer is correct or it is also changed? That is correct? Okay, great. Now, if I shift to Japan, if I shift to purchasing from Japan, तो मैं already calculate कर चुका हूँ ना? I have already calculated it, no? How much? Correct, 4 crore 80 lakhs. Arey, yes or no? I have already calculated it, no? Chalo, I'll do it again. 320 rupees into 1,50,000 units here, yes or no? Which is how much? 4 crore 80 lakhs. Which is better? Purchasing from that Japanese MNC is better. It will result into saving. How much saving will it result into? 91 lakh 9,500. Yes or no? Who is going to benefit out of this? Indian subsidiary is going to benefit out of this. How much? Whatever amount that you are profiting. Remember, you have a silent partner with you who is ready. Who is that? Government is ready with its katora. Oh, chalo, give tax 34. Kitna, how much percent? 34%. Come on. Your profit is not your profit. You are a partner with government. No, yes or no? Are we understanding? So here indirectly saving means you are going to increase your profit by this much amount. Is that your own whole profit is yours? Who is the partner? Government. So can I say we will have to reduce that government share also? How much is that? 34% corporate tax of India. No, I don't want that. Can I say how much post saving I will make post? Okay. Great. So can I say now what you are going to say is the saving post tax? Are we understanding, guys? Yes. Tell me how much? 60 lakh? 60 lakh 12,270. This is post tax. This is mine. 60 lakh 12,270. You are mine. You are mine. Correct? All taxes paid, everything paid. Now you are mine. Are we clear? So Indian subsidiary is happy with purchasing from Japan. So we are in short discontinuing our ties with China. So who is going to face that loss? China is going to face the loss. So let's calculate the Chinese loss. Will we start? Yes. Will you guide me the same way? Yes. Chalo. So now if I shift to Chinese subsidiary, what are the losses that they are incurring? Can I say instead of selling 1,50,000 now they are able to sell how much? So can I say net 30,000 units they are losing? For every unit how much they were earning? Net. For every unit they were earning 10 rupees. No, we are concerned with the net profit, right? So for 30,000 units they are going to lose 3 lakh yens. Arey yaar bolo. So we will say that the Chinese subsidiary, we will tell the Chinese subsidiary brother, you are losing on 30,000 units at the rate 10 yen per unit, which is the profit. Yes. So can I say you are losing out on 3 lakh yen? See, now here we have calculated everything in rupees. Here we have calculated everything in rupees. So it is better, no? We will keep comparable. So we will convert this also in rupees. Can we do that? So 3 lakh yen is how much? Into 9.8? You multiply by 9.8, 29 lakh 40,000 rupees we are losing. Anything else we are losing? Previously, sir, inland taxes were not paid by us, but now we have to pay inland taxes also. Correct? How much? 10%. How much? I'm asking. See, they have given that inland taxes is to be paid on the sales value. What is the sales value? 1,20,000 units multiply by 30 rupees, 30 yen multiply by 10%. That is the inland taxes that I will have to bear. Are we understanding, guys? So plus inland taxes. Okay, so we will say for 30,000, only 30,000 units, no? Yes. Or 1,20,000? For the whole sale. So full 1,20,000 that you are selling internally inland, you have to pay, multiply by on 30, and you will have to pay, multiply by 10%. Are we understanding? Works out to how much? 3,60,000 yen. Can you please convert that into rupees? So can I multiply this only by 9.8? Here only in continuation I am multiplying it by 9.8. That's okay? So tell me how much? 35,28,000. Oh Christ. So how much is the loss that are we making? 68,000. Oh gosh, but here I am earning only 60 lakh. So in short, this is a loss making venture for me. Yes or no? Arey boss, when there is a profit, there is a tax benefit. In the same way, when there is a profit, you have to pay tax. In the same way, if there is a loss, there is a tax benefit on the loss that you are making. No? Yes or no? Wait, I'll explain you how. You have cleared your intermediate taxation? I doubt. Sir, we are going to appear for final taxation. But you don't know this, that for loss also you are going to get the benefit of taxation. Wait, I'll explain. I know you don't know. You have never made a P&L account or made an effort to analyze that how am I going to benefit in loss if I am making a loss. Pay attention here. Suppose if I am making a gross profit of say 1,000 and say if there is an expense of say 300. So net profit is how much? 700 into 30%, say tax rate, let's assume tax rate 30%. So how much it will be? 210 we will have to pay. Correct? Now suppose if there is a net loss. Suppose if there is a net loss of rupees, suppose this net loss is of rupees say 500 rupees, net loss. Correct? So if there is a net loss, then in that case, tell me, will I have to pay tax for that year? No. Suppose next year I make a net profit of 500. What will happen? Can I say there is a provision of set off? So instead of paying, suppose if I make a net profit of 700 in the next year. How much? 700. So will I pay directly full tax on 700? Can I say I will first reduce the net loss which I had made in the last year? So 500 will be reduced. So how much is net? So 200 into 30% is how much? Tell me. It is 60. How much have I saved? See, are you understanding? If this net profit directly 700 I had to pay taxes, I would have paid 210. But now because I had a loss of 500, I am paying only 60. So how much have I saved because of this loss of 500? Can I say 150 taxes I have saved, which is basically 500 into your tax rate 30%, which is 150. No. Arey Baba, when you are in short, when you are making a loss, you are saving on taxation. Arey yes or no? Yes, definitely. See, whatever expense that you are incurring, suppose if I incur 10,000 rupees for an expenditure, indirectly I am incurring only 7,000 rupees. Because 30%, because of that expenditure, my net profit will go down by that amount. So my net profit goes down by that amount, that much amount, less tax I have to pay, no? So any expenditure that I am incurring, 30% I am saving. So in the same way, if any loss I am incurring, 30% I am saving. Yes, am I teaching to CA final students only? No, yaar. I mean, this is the basic yaar which even inter students know, yaar. Why are you giving me so confused looks? Sir, our face is like that. Your face is like that. Are we clear? Yes, sir. Right. So here also, if there is a loss of 64,68,000, if there is a loss of 64,68,000, we will save some tax benefit on this. How much? This is China. So China's corporate tax rate is 25% minus. So your loss after tax is how much? 48 lakh? 51,000. Now, if you wouldn't have considered this benefit of taxation, you would have dismissed the opportunity and it would have been wrong. But now we realize that this is a better option, because if we go ahead with this, wherein India will purchase from Japan and China will sell to the local market, net it is going to result into a profit. Why? Because profit after tax is how much? 60 lakh 12,270, no? Yes, sir. Yes or no? And loss after tax is how much? 48 lakh 51,000. So net we are making a profit after tax, no yaar? How much? 12 lakh 61,000. 270. And so what will be our financial advice to USSCI? We should go ahead with India purchasing from Japanese MNC after considering all the provisions of taxation and everything. Are we clear? Yeah, whatever man, whatever. You do that, all that calculations, I don't want. I want the net answer. That is, go ahead with the conversion. Go ahead with, yes, with the Japanese people. Are we clear, everyone? Yes or no? Yes, can be asked for 8 marks in the examination. So I hope we are clear. Any questions? No? Please start. Come on.